Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just broken above a quite significant structure level. In fact, what we can see is that from here, all these previous rejections to the downside were created. However, at the moment, we had the break back above the zone with the monthly close that we had last month above the area. At that point, all this previous resistance was turned support. The market has in fact now tested this previous monthly resistance turned support, is already rejecting it to the upside, and from here we could expect more bullish continuation to be created. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can notice a very clear impulse and correction. Generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse candle. And if we do that, we can see how we have 0.618 and 0.786 Fibonacci retracements lining up exactly inside of this area, and actually creating confluence of support inside of this zone that we could in fact expect this market to test and then to reject to the upside. So at the moment, here on the weekly, the market is testing confluence of support that we could expect this market to reject to the upside. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, I did speak about gold quite a few times in the past. Starting from here, I did speak about gold when the market was around this area. I explained all the reasons for which we could expect this move higher. Then again, after this impulse, I explained all the reasons for which we could expect first the correction and then the higher high to be created. And again, that is exactly what the market did. Then we had the creation of this M pattern. From here, I explained all the reasons for which we could expect this move higher. And again, that is exactly what the market gave us. And I even spoke about gold just a few days ago after the creation of this M pattern, and I explained all the reasons for which we could expect the completion at the neckline. And again, that is exactly what the market did. And by the way, I will link in the description all these previous analysis, so you can go and check them out for more free education. Now, at the moment, we have to reevaluate this structure that the market has created here from a daily perspective. In fact, clearly, this is the previous daily high from a structure perspective here for gold. From this level, all this previous move to the downside was created. Now, until the market will remain below this resistance, it can easily get rejected to the downside. However, if we get a break above this zone, at that point, this previous level of resistance would be turned support. So if we get this break, after the break on the retest of the previous resistance turn support, that is where we would have very good probabilities of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. Now, why am I speaking about more institutional longing? Because if we go and see what is going on when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing and how they're moving their positioning, what we can notice is that on gold, with the last reports, hedge funds have been clearly longing gold aggressively and increasing their net positioning, so moving to the bullish side for gold. We can notice, in fact, how we went from having 71.4k net positions all the way up to having 203.5k net positions. So this is a huge increase of the net positions, showing how institutions have been moving to the bullish side of gold. In fact, we can notice how longs went from 220.3K from an institutional perspective all the way up to 288.8K, and shorts went from 148.8K all the way down to only 85K. So clearly, hedge funds have been increasing their longs and decreasing their shorts for gold, making it stronger. Now, moving back to the technical side of this market, as we were just saying, if we will have a successful break above this resistance after the break on the retest of this previous resistance turn support, this is where we have good probabilities of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So if we get this break and the retest, how I could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what I could be doing potentially is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to me one of my valid entries, at that point, I could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns, the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you will have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible, and I will see you in it. The link is both in description and in my bio. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.